The Nigerian Naira plunged to a record low on the parallel market as shrinking dollar supply from the central bank forced buyers to the streets for hard currency. The Naira was changing hands at 990 Naira per dollar on Thursday from 970 Naira the previous day and 903 Naira at the start of this month, a 20% weaker than the official rate of 776 Naira 60 kobo per dollar as reported by FMDQ, a Lagos-based platform. The gap between the official and parallel exchange has steadily widened after converging briefly just after the reforms put in place by the federal government. The Naira has been losing ground since June when the Central Bank of Nigeria allowed it to trade more freely and scrapped the old regime of multiple exchange rates. To discuss this further, we are joined on the news by Head Fixed Income and FX, Chapel Hill Denham Security, Oladipo Ajayi. Mr. Ajayi, good to have you on the news. Let's begin with your reaction to what seems like a major economic inroad by President Tinubu and his delegation in the U.S. To what extent do you think these outings at the United Nations General Assembly will improve the economic situation of the country back home?
Yeah, thank you very much for having me this evening. To be realistic, before now, after the fiscal policies have been actually straightened out and we aren't seeing much traction from foreign investors, the view of most analysts was that the president needs to embark on those shows. And we saw what happened in India, and the same thing is also what's currently happening in the United States. And I'm very sure the reasons for the road show basically is to actually meet investors and tell the stories.
But there's plenty of questions.
So a lot of people are still of the view that Nigeria is the whole Nigeria, and the president is telling them the story that we have removed subsidy, and also the FX window has been unified, and as a result of that, we are ready for business. And to be realistic, I think that is the right thing to do in such a time like this. And in no time, we'll start seeing the result of this trip.
Nigerian government introduced economic stopgaps to address the plunging Naira value. It floated the Naira, entered a $3 billion crude oil for loan deal with Africa Export-Import Bank, clamped down on speculators, restricted diaspora remittances. Why didn't all these measures nip the Naira fall?
Well, at the time, you get to a level that we'll take a step forward and we'll take 2 steps backward. Just about the time that the information about the deal with Africa Export actually hit the market, that sounds more like a good news, and we saw Naira appreciate in the parallel market, but just not quite long. We saw the report released by JP Morgan, which further actually x-rayed the central bank financial report. It was at that point that the JP Morgan actually mentioned that Nigerian government does not have as much as what we have clamored to have in the reserve. And immediately this information hit the market, automatically you expect the market to react accordingly, and that's exactly what we are seeing currently. What that means to the market is that the central bank does not have the firepower to actually protect Naira. People that have future obligations are quickly running to the market now to quickly go and buy and hold. And some other people, instead of actually investing in other financial security, they are currently now speculating on Naira based on the view that some analysts felt that Naira will actually hit 1,200. So a lot of people are actually buying to hold to take advantage of the likelihood of Naira touching 1,200.
The Naira was changing hands at 990 per dollar on Thursday, and it's been speculated that it has reached the 1,000 Naira mark. How debilitating will the impact be on the economy in the coming months if left unchecked, with inflation already at 25.8%?
Sincerely speaking, it's going to affect the economy seriously. If you check the inflation figure, imported inflation was very high in the month of August, and That tells you the impact of the current volatility that we are seeing in the parallel market. And also at the same time, most manufacturers are unable to actually access FX in the IE window. So most of them have to actually go back to the autonomous window where they can actually get to buy and actually meet their demand. And by so doing, it means that some of them may actually now start laying people off, considering that the price of Naira has actually depreciated in the market seriously. And what that also means to them is the fact that the output, the cost of production would have actually risen aggressively. And there's even a report that was released today that the federal government has finally introduced subsidy. And one of the reasons why you see things like that come on board is the fact that as oil price is going up, at the same time, Naira is further depreciating. So it means that the pound price of PMS will actually go up. And but what the government has tried to do is that to actually still freeze it at current price so that it will not cause too much panic on the market. So sincerely speaking, if we allow this thing to persist without putting a check in place, it will get to a level where it will be unbearable for Nigerians. And at that particular point in time, the government may not be able to actually hold the masses to ransom at that particular point in time.
Okay. Can this policy be reversed? I mean, the Naira has been losing ground since the CBN allowed it to trade more freely and scrap the old regime of multiple exchange rate. Should the policy be reversed, as some say it doesn't seem to be achieving anything, and you have expressed concern?
Sincerely speaking, you cannot reverse the policy. To be realistic, the policy is actually a good one. But just that what the government did not envisage was that the central bank does not have that much firepower to actually defend the currency. And also, they never envisaged that the foreign investors will not start flowing in immediately those two key decisions were made. But now that we are taking that decision, it's not. It's a decision that you are taking that you cannot reverse as we speak in the market. What the government just needs to do is exactly what they are doing. You need to market the country. You need to actually create that confidence. You need to instill confidence in the heart of investors so that you can actually lure them into the market as we speak. And if you remember vividly yesterday when the president was speaking at the UNGA, he mentioned that as we speak, they are not begging for like aid or grants. What we are talking about is people to partner with Nigeria, people to partner with Africa. It's not a time where Africa will be begging for crumbs that is falling from the table when we are heavily endowed with resources, both in natural resources and human capacity. So what the president is saying now that we have what it takes in terms of natural resources. We have all what it takes in terms of human capacity. What we need is a financial partnership from foreign investors. And at the same time, what the president was also pitching was that it's not a time where you come and just buy or extract resources, mineral resources in Nigeria and export out of the country. No, that era has gone. The new era is an era where you need to come to the country, site a business in the country, extract in the country, produce in the country, then you can now export the finished product. What that will mean to the country is that it will further increase the employment levels of Nigerian citizens, and at the same time also help.
There seem to be, let me interject, I know the network cut you off a bit. If you can hear me, Mr. Ajayi, there seems to be a lot of enthusiasm about the president's, sojourn to the UNGA and all he's trying to accomplish. Do you see an immediacy in the gains from his exploits at the UNGA at the moment in terms of trying to address the pressure on Nigeria's currency? Okay, I understand we've lost Mr. Ajayi. Hopefully, we can continue the conversation another time. Thank you very much in absentia, as they say.